Hi everyone, welcome to my short class on double entry bookkeeping. We recall that we had a class on double entry and we solved some questions. So basically, I'll be solving those questions now. I'll be going through those transactions. But to start with, what is double entry? Double entry is one of the very basic principle of accounting. It says that for every debit entry, there must be a corresponding credit entry. And for every credit entry, there must be a corresponding debit entry. As long as you know the double entry principle very well, you don't have any problem with accounting. If you know double entry principle very well, you can't have any problem with income statement, you can't have any problem with statement of financial position, you can't have problem with cash flow and other accounting topics because the basics of accounting is double entry. What accounting is all about entirely is double entry. Once you know your double entry, you have known accounting very well. So the basics of accounting is what we call a double entry. And the principle is for every debit entry, there must be a corresponding credit entry. And for every credit entry, there must be a corresponding debit entry. So essentially in every transaction, there are always two accounts to a transaction. At least there must be at least two accounts to a transaction. You debit the receiving side and you credit the giving side. You debit the receiver and you credit the giver. You debit the receiver and you credit the giver. You debit the receiving side and you credit the giving side. So for every accounting transaction, there are always two sides to it: the giver and the receiver. You debit the receiver and you credit the giver. So we are going to go through the transactions one by one. So and we are going to solve them. I believe that once you are able to have a good knowledge of double entry, then you won't have any issue whatsoever with with accounting. Now, the if some if drape shop, sorry, I can't see clearly, so try to bear with me. If drape shop is what we is the question we did in class, actually is what we are going to do now. Now the number one, so post the entries. You will need the following accounts: furniture account, account receivable, bank account, cash account, owner's equity, long-term loans, short-term loans, account payable, sales, purchases, rental expenses, advertising cost, office expenses, and interest expenses. So now moving swiftly on. Number one states that if deposits as the owner's equity 4,000 euro and puts the money in company's bank account. Now, in this transaction, the first question you need to ask yourself: what are the two accounts involved? What are the two accounts involved? So once you're able to answer that question, then you ask yourself further that which account am I going to debit and which account am I going to credit? Now the first question: what are the two accounts involved in this transaction? We were told that if deposit as the owner's equity is 4,000, there is equity in in that transaction, and if put the money in company's bank account, and so there is bank account in that transaction. So the two accounts involved are bank account and equity account. Bank account and equity account. So now that we have known the two accounts involved, ask yourself: which account am I going to debit, which account am I going to credit? Equity is giving out and bank is receiving. Even ordinarily, bank account, you are in bank has a debit balance, so you always debit your bank, and equity has a credit balance or a credit entry. So you begin your equity with a credit entry. So now in this transaction, I open my bank account. My bank account, I have my equity 4,000 naira. So I open my equity account as well. Debit side, credit side, my equity account. So my bank is 4,000 naira. So in bank account, you are going to debit bank account with equity of 4,000, and you are going to credit equity account with bank of 4,000 naira. This is what I'm talking about. So this is my bank account. This is my bank account. This is my debit side, and this is my credit side. Because I'm going to debit my bank with equity of 4,000, and I'll come to my equity account as well. So this is my credit side, and this is my debit side, and this is my credit side. So I'm going to credit equity account with bank of 4,000 naira. So that's just how you solve that transaction: debit the receiver and credit the giver. Now moving swiftly on. Number two is if company takes a loan from a bank and if deposit also that money 6,000 in company's bank account. if took a loan and deposit the money in the bank account. What are the two accounts involved? When you take a loan from a bank, then you are supposed to know that you are going to open long-term loan account. We have two types of loan. We have the long-term loan and the short-term loan. But in this question, ordinarily the question is going to tell us if it is a long-term loan or a short-term loan. But the context of this question, we know that it is a long-term loan. So we are going to open a long-term loan account and are going to, we already have a bank account. So because you are putting money in our bank account, it means our bank is increasing. We are putting money in our bank account, so our bank account is increasing. Because of that, we are going to debit our bank. If our bank account increases, we debit our bank. If our bank account decreases, we credit our bank. So now our bank account, we are putting money in our bank account, and our bank account is going up. So we are going to debit. We are going to debit our bank with how much? With loan of 6,000 naira. So I'm going to come here. Long term loan, how much? 6,000 naira. I'll open my long term loan account. Long term loan is a liability, is a long term liability, so it will be credited. So I'll come to the credit side, debit side, credit side. How much? Bank, 6,000 naira. Now look at it. This is my bank, because my bank is increasing. I'm putting money in my bank account, so my bank is increasing. So I'll debit my bank. So this is the debit side. I'm going to debit my bank account with long-term loan of 6,000 naira. So I'll come to long-term loan account as well, and I'll credit it, because long-term loan is a liability, and I'll always credit my liability. So I'll credit my long-term loan with how much? With 6,000 naira. So you debit the receiver, you credit the giver. Debit the receiver, you credit the giver. Debit asset and you credit liability. So these are the principles you should always converse at with when it comes to the issue of double entry principle. Now, moving on. Number 3. If withdraws 500 naira from bank account and transfer it in a cash account. So we are taking money from our bank account and we are putting it in our cash account. So our bank account is coming down and our cash account is going up. Our bank account is coming down and our cash account is going up. So because my bank account is going down, I'm going to credit my bank because my bank balance is reducing. So I'll credit my bank, and my cash account is increasing. So I will debit my cash. So now I'll open cash account. Debit side and credit side, because I will debit my cash account with how much? 500 naira. So I'll come and say bank, 500 naira, and I'll go to my bank. I'll credit my bank with 500 naira. I'll say cash of 500 naira. So this is it. The first thing I did was to open the cash account. I opened my cash account here. This is my cash account. This is my debit side, and this is my credit side. So I will debit my cash with bank because the money is coming from bank. So the money is coming from bank. How much? 500 naira. How much? 500 naira. So I'll come to my bank account as well. I'll come to my credit side because money is leaving my bank account. So I'll credit my bank account with how much? 500 naira. Cash, the money is going to cash. How much? 500 naira. So and my bank is reducing and my cash is increasing. So I'll credit my bank and I'll debit my cash. Debit cash and credit bank. Bank is reducing and cash is increasing. So just as you move on, then you get conversant with these principles of of double entry. So the next transaction is if buys the shop furniture 2,000 naira on account. If buys the shop furniture 2,000 naira on account. When you're buying something on account, it means you are buying it on credit. You're not paying for it. So when you're buying something on credit, it means you have to open your account receivable account. So now in this transaction, like I told you before, ask yourself, what are the two accounts involved? Now, if buys shop furniture 2,000 naira on account, the two accounts involved are furniture account and account receivable account. Whenever you see on account, it means it is on credit, If anything is on credit, then you open your account receivable account. You have to open your account receivable. And so in this transaction, the two accounts involved, they are my I'll open account receivable account, my furniture account, and account receivable. You can call it account receivable and you can call it receivable account as well. So my debit, I will do my debit side, my credit side, debit side, credit side. So now, oh sorry, there is an error. Sorry, when you're buying on credit, it is account payable. Pardon me for that mistake. When you're buying on credit, it is account payable. But when you are selling on credit, then it is account receivable. You need to take note of that. When you are buying on credit, you are dealing with your creditor. Because, for instance, I came to you, maybe you are selling wristwatch. I bought a wristwatch from you on account. It means I'm not paying to you. I didn't buy it, with my cash. So I'm taking it on account. It means I'm buying it on credit. So you are my creditor. You are my creditor. I'm your customer, so you're like my account, payable. So now I'll open furniture account and account payable account, not account receivable account. So furniture is an asset. An asset always have a debit entry. So I'll go to my debit side. How much is the furniture? 2,000 naira. So I'll come to the debit side. Account, I just see payable. How much? 2,000 naira. So I'll go to my payable account too, because payable is a liability. Payable is a liability. Liability will have a credit entry. So I'll go to my credit side. How much? Furniture. Furniture of 2,000 naira. So there are two accounts involved. We have the furniture account and we have the payable account. I will debit my furniture and I will credit my payable account. I'm going to debit my furniture because it is an asset. An asset is increased. When an asset increases, you debit it. I'll credit my liability because my liabilities my liability is increasing, so I'll credit my liability. And account payable is a liability. So this is what I'm talking about. I'll open the furniture account. This is my debit side and this is my credit side. Furniture is an asset, so I will debit my furniture with payable of 2,000, and I'll open my payables account and I'll credit my payables account with furniture of 2,000 naira. I really do hope that you are getting what I'm trying to say. So and now moving on to the next transaction. We're told that if buys fabrics from wholesale cutting if buys fabrics from wholesale cutting clothes 3,850 on account. So if buys fabrics from wholesale cutting clothes 3,850, you are buying on account. You are buying on credit. And I said it that when you are buying on account, it means you are buying on credit. So you open the two accounts involved. There must be payables in that account, because as long as you are buying on account, so you must open payables account. But if you are selling on account, you are going to open receivable account. So here we are buying on account, so we are going to open payables account. And because we are buying clothes, because we are buying clothes, so we are going to open purchases account. We are going to open purchases account, and we are going to open the two accounts in this transaction are purchases account and payable account. So I'll open my purchases account. So my purchases account is how much? 3,850. So I will debit my purchases account with 3,850, and I will credit my payable account with 3,450. 3,000. Now let me show you what I did. So the two accounts involved in this transaction, they are the purchases account and payable account. So I will debit my purchases account with payables of 3,850, and I will credit my payable account with purchases of 3,850. So I will continue to repeat this constantly. When you see any transaction, you ask yourself, what are the two accounts involved? Once you know there are two accounts involved, you ask yourself, which account am I going to debit? Which account am I going to credit? Once you are able to answer this question, then you are good to go. You are good to go. You are good to go. Now, moving swiftly on to the next transaction. The shop rent is paid from bank account. The shop rent is paid from bank account. I guess you know the two accounts involved. The shop rent is paid from bank account. So the two accounts involved are rent and bank account. Rent and bank account. So I'll open my rent account. So I have my bank account opened already. So I open rent account. Now, let me use this transaction again. Shop rent is paid from bank account 500 naira. Now, we have bank account and we have rent account. Now, you don't know which one to you know you know you're supposed to debit. You don't know you're supposed to credit. The question you need to ask yourself now is this: your bank account, is it increasing or decreasing? That's the question you need to ask yourself. My bank account here is decreasing because I'm paying rent. I am paying rent, so my bank account is reducing. So because my bank account is reducing, I am going to credit my bank account. So once I credit my bank account, definitely the corresponding debit entry will be what? Will be rent account. So I would debit my rent account with how much? Okay, the shop furniture is paid. A shop rent is paid from the bank account. Okay, it is 500 naira. 500 naira. So I'll come to my bank account. Rent 500 naira. This is my rent account. This is my rent account. I will debit my rent account. This is debit side, this is credit side. So I will debit my rent account with bank of 500. And now this is my bank account. This is my bank account, and I will credit my bank account with rent of 500. You debit bank, you credit bank, and you debit rent. So just follow it. Ask yourself, the two accounts involved. There must be at least two. In some cases we can have three accounts involved, but at least there must be two. The two accounts involved, which one am I going to debit, which one am I going to credit? Once you know that, then you are good to go. You are good to go, my friend. You are good to go. So now the next transaction is an advertisement in a local newspaper. 80 euro is paid in cash. Advertisement in a local newspaper is paid in cash. Advert, okay. Advertisement in a local newspaper is paid in cash. Now, what are the two accounts involved? It is not newspaper account. It is not paid account. So you need to be very careful. The two accounts involved, we have advertisement account, because you are paying for advertisement, so you open an advertisement account, and you are paying cash, so you open cash account. So the two accounts involved are advertisement account and a cash account. So I have my cash account opened already, so I open advertisement account. Now we are paying cash. Is our cash increasing or is it decreasing? When you are paying cash, it means that your cash is decreasing. If your cash is decreasing, you are going to what? You are going to credit your cash. You are going to credit your cash. So if I'm going to credit cash, then the corresponding debit entry is what is advertisement. So I will debit advertisement. How much is it? My 80 euros. So I'll debit advertisement and I'll come to cash. I'll credit cash. So this is my cash. I'm crediting my cash with advert of 80 euro, with advert of 80 euro. So and this is my advert. I'm debiting my advert with cash of 80 euro. It's as simple as that. Very, very simple. Now the next transaction, we don't have enough time. Time is of the essence. Another okay. Number 8, the shop furniture is paid from the bank account. The shop furniture is paid from the bank account. The shop furniture is paid from the bank account. Now, and we in this one, we are referred to, if you have your question, we are referred to transaction 4. In transaction 4 says that if buy the shop furniture on credit, so we bought furniture on credit, and now in number 8 we are told that the furniture is paid from the bank account. So we now go to how much did you buy the furniture? We bought the furniture for 2,000 naira. We bought the furniture for 2,000 naira. So and we are paying with our bank. So we open our bank account. We go to our bank account. We go to our bank account and credit it because we are paying our bank account. We are paying for furniture. We are paying our creditor. So our bank account is coming down. Just a moment. So we are going to the two transactions, the two accounts involved are the bank account and account payable account because we are paying our creditor. So I'll go to my credit side of bank. How much how much did we buy the furniture? We bought the furniture for for 2,000 naira. So we are paying for the furniture from our bank account. So we are going to credit our bank account. And now we go to our account payable because I bought this furniture from you on account, and now I'm ready to pay you. So if I'm paying you, I'm going to debit your account as a creditor. So I'll come here. I'll put my furniture. I'll put bank 2,000 naira. Yeah. On the fourth, let me explain this transaction again. On the fourth, I bought furniture from you on credit. Now then I opened my furniture account. I debited it, and I opened my payables account. I credited it. Now on the 8th, and I paid you from my bank account. So I'm going to credit my bank account because my bank account is reducing, and then I will debit my payables account because I'm paying my payable. So I'm paying my creditor, so I'll credit my payable account. So this is what I did. This is just it here. This is my bank account. This is my bank account. I'm going to credit my bank account with 2,000 naira, payables of 2,000 naira. Then I'll go to payables account as well. This is account payables, and I'll debit it with bank of 2,000 naira. That's all. Now the next transaction. Cash sale is entered 3,300. This is just very simple. When you have a cash sale, you don't have to think much about it. Cash sale. So the two accounts we have are the cash account and the sales account. That does not require any thinking. We have the cash sale. Cash sales is entered 3,300 pounds. So I open I have my cash account opened already. So and then I'll open my sales account. My sales account. In accounting, there are some accounts you should know that they will definitely have a debit entry. In some accounts you definitely have a credit entry. For instance, sales will always have a credit entry. Purchases will always have a debit entry. Your assets will always have a debit entry. Your liabilities will always have a credit entry. Your equity will always have a credit entry. So these are some of the principles that you need to know and you need to apply when you are solving questions like this. It doesn't really require thinking. You understand. So my sales account, how much? 3,300. So I'll credit my sales account because we have a cash sales. So I'll credit my sales with cash of 3,300, and I'll go to my cash as well. I'll debit my cash with sales of 3,300. This is my sales account. My sales is credited with cash of 300, and I'll go to my cash account. My cash account is debited with sales of 3,300. No, let's assume it was bank. Assuming we were told that the sales the money for the items sold was put in our bank account. Then we are going to debit our bank account instead of our cash account. Now the next transaction is number 10. Some office supplies are bought in cash. Very, very interesting. Some office supplies are bought in cash. Some office supplies are bought in cash. So what are the accounts involved in this transaction? There are just two accounts involved. What are those two accounts? Is it office supplies? Is it bank? Is it purchases? So these are the questions you need to ask yourself. Fully sure. So you need to ask yourself, is it when you are buying something, you open purchases account, and here we are told that we bought office supplies. Are we going to open office supplies, or we are going to open purchases account, or we are going to open bank account? Which of those accounts are we going to open? Number one is that since you have bank in that transaction, you are definitely going to open bank account. That one is sure. You open bank account. So what is the corresponding account? Is it office supplies? Is it purchases? Now, let me use this as an example. When you buy when a company, as if a company is selling cars, when a company is selling cars, if I should buy car, then that is purchases for me. If I should buy a car, maybe I bought cars for his purchases is items that are bought for his sale. When you buy an item, or when you buy items because you want to resell them, that is purchases. But when you buy item not for the sake of a sale but for some other things, for instance, you can buy an asset for your company. So you can buy some items for your company. Those items might be assets. But when you are buying them because you want to resell them, then it is purchases. Now we're told that office supplies are bought. When you are buying office supplies, it means you want to resell them. It means you want to resell them. So because you want to resell them, you have to open purchases account. Purchases is the items that are bought for is sold. Now, in my company I am selling cars, I am selling motor vehicles, then and I if I'm selling motor vehicles, then I bought, let's say I bought a building. If I bought a building, that building is not meant for a sale, so I won't open purchases account, but I will open building account. You are getting it. If I buy furniture, I won't open purchase account but the furniture account, because I don't sell furniture. But if I'm selling furniture and then I bought furniture, I'll open purchases account. Any item that is bought for a sale, it is purchases account. You get it? So now office supplies are bought in cash for how much? For 50 euro. So I will open my purchases account. I have my purchases account already. So I will debit my purchases account with what? With cash. of 50 euro, and I'll go to my cash account. I'm going to credit my cash account with purchases of 50 euro. This is my cash. This is my cash account. This is my cash account, and this is I'm going to credit my cash account with purchases of 50, and then I'll come to my purchases account as well. This is my purchases account, and I'll debit it with cash of how much? With cash of 50 euro. With a cash of 50 euro, you can be doing it from your own end as well. So the next transaction is money from cash is transferred to the bank account. Money from cash is transferred to the bank account. We can transfer we can transfer cash to bank account, and we can transfer from bank to cash account. It's like a contra entry. So just what you need to do, where is the money coming from, where is it going? You debit the receiver and you credit the giver. You debit the receiver and you credit the giver. The money is coming from bank, it is going to cash account. Cash account is receiving, bank is giving. So I'm going to credit my bank, I will debit my cash. Cash is receiving, debit the receiver, bank is giving, credit the giver. Debit the receiver, credit the giver. My bank account is giving to my cash account. So my bank account is reducing, so I will credit my bank account. My cash account is increasing, so I will debit my cash account. Whichever idea you want to use, just know that you have to debit the receiver and you want to credit the giver. You have to debit the increasing account, and you have to credit the reducing account when it comes to bank account. So money from cash is transferred to the bank account, 3,000 euro. So I'll go to my cash account. I'll debit my cash account with how much? 3,000 euro. So I will debit my cash with 3,000 naira, and I'll credit my bank with 3,000 naira. Sorry, 3,000 euro. 3,000 euro. Pardon me. 3,000 euro. So this is my bank account. This is my bank account, and this is my credit side. This is cash. I'm going to credit the cash. I'm going to credit my bank with cash of 3,000, and I'll come to my cash account as well. This is my cash account, and I will debit my cash account with bank of 3,000 euro. With bank of 3,000 euro. So now the next transaction is what? The rest of the goods, fabrics, they are sold on account. The rest of the goods are sold on account. So that is, we are going to open sales account, and because they are sold on account, we are going to open account receivable. Whenever you are selling anything on account, you open account receivable. Whenever you are buying something on account, you open account payable. And oftentimes, when you open account receivable, you open sales. When you open account payable, you open purchases. The corresponding entry is purchases account. The corresponding entry for account payable is purchases account. The corresponding entry for account receivable is sales account. So here we are told that we are selling an account, so we are going to open account receivable account. We are going to open account receivable. Receivable account. Receivable account is an asset. An asset will have a debit entry. So we are going to debit my receivable account. Because we are selling, so oftentimes the corresponding account for receivable is sales account. So I will debit my receivable account with sales of how much? Sorry, where is the transaction number? 200. So this is it. This is my receivable account. I'll open receivable account. This is the receivable account. I'm going to debit it with sales of 2,200, 2,200. So now the corresponding entry is my sales account. My sales account is opened already. So I will debit my sales account. I will debit because my sales is I will debit my sales account with account receivable. How much? 2,200. I will debit my sales account. Here I have debited account receivable. I have debited account receivable with 2,200. So I'm going to credit sales too with 2,200. So this is my sales account. I have credited it. It has been credited with 2,200. So most times your sales is always on credit side and your purchases is always on debit side. Now the next transaction a loan interest of 60 is paid from bank account. What are the two accounts involved? Your bank account and your what? And your loan interest account. Your bank account and your loan interest account. So because your bank account now, your bank account, is it increasing or decreasing? You are paying from your bank account, so definitely your bank account is decreasing. So I will credit my bank account and I will debit my loan interest account. Loan interest is an expenses, so I will debit expenses. Now my bank account, how much? I'll credit my bank account with loan interest. How much? £60. Sorry, €60. So and I'll open my loan interest account as well. Loan interest. Interest is an expenses. Loan interest is an expenses. So I'll debit expenses. How much? Because the money is coming from bank. Bank is paying our loan interest too. The corresponding entry is bank. So you can see this is my loan interest account. I will debit my loan interest account with bank of 60 and I'll come to my bank account and I will credit it with loan interest of 60. So there are always two parties, two accounts, a transaction. There are always, so you debit one and you credit one. You debit the receiver, you credit the giver. Now we are almost done. Record depreciation on furniture 400. Depreciation is a reduction in the value of an asset. Like it can be caused by wear and tear or any other thing. So when you say depreciation, is the meaning is the reduction in the useful in the value of an asset. So depreciation is an expenses. It is an expenses. So I will open depreciation account because we were told that there is depreciation on furniture for 400. So I will open my depreciation account. Depreciation is an expenses. You debit an expenses. You credit an income, you debit an expenses. So I'll come debit and credit. I'll debit my depreciation with furniture of how much? 400. So this is my depreciation account. I will debit it with furniture of 400. Guess where the corresponding account is going to. It is here already. The corresponding account must be what? It must be furniture. So I will come to my furniture account, and I will credit it with depreciation of 400 euro. So this is my furniture account, and this is the corresponding entity. This is depreciation of 400. This is depreciation of 400. Now, the last transaction, we're told that agreement, according to the loan agreement, the amortization is 1,000 euro per year starting next year. Record the transaction of 1,000 euro from the long-term loans to the short-term loans. We're told to record a transaction. We are to record the transaction of 1,000 from long-term loan to a short-term loan. It's like we are transferring from our long-term loan to our short-term loan, transferring from one account to another account, from where the 1,000 is coming from the long-term loan coming to the short-term loan. So we credit the giver and we debit the receiver. Long-term loan is given out while the short-term loan is receiving. So I'll open my short-term loan account. Remember, this is for the first financial year. Later on, when we're done with the first financial year, we are going to do for the second financial year, and we're going to do for the third financial year. So this is for the first financial year. The short-term loan. So I will debit my, because short-term loan is a liability. So short-term loan is a liability, and liability is increasing. So I will credit my short-term loan with 1,000 naira, because short-term loan is a liability and it is increasing. We are reducing our long-term loan and increasing our short-term loan. So I will debit my long-term loan and I will credit my short-term loan. So what is my long-term loan? I will debit my long-term loan with 1,000 euro. Sorry, pardon me for saying naira. That is the currency we spend in Nigeria. Short-term loan. So how much is that? 1,000 euro. So this is my long-term loan. I'm reducing my long-term loan with 1,000. So this 1,000 I'm taking it to what? I'm taking it to short-term loan account. So I'm debiting my long-term loan, and then I'm here. I'm going to credit my short-term my short-term loan. I'm crediting my short-term loan with how much? 1,000 euro. So we are done with that transaction. So we are going to close the account. We are going to close the account. We are going to close the account. So to close the bank account, on the credit side of the bank account, we have 500 plus 500, that's 1,000, plus 2,000, that's 3,000, plus 3,000, that is 5,000, and 60. So 1,000, 2,000, that's 3,000, 3 plus 6,000, 6. We have 6,060 on the credit side, and on the debit side, we have how much? We have 10,000. Yeah, I've made a mistake somewhere. And that was a mistake. You have to go to a transaction, um 3,000, transaction 11, where money is transferred from cash to the bank. Money is transferred from the cash to the bank. So I have to credit my cash, because money is from, we are taking money to bank from cash. When money was coming from bank to cash, I credited my bank and I debited my cash. But now money is taken from cash to the bank. So I'll credit my cash and I'll debit my bank. So for transaction 11, bank of 3,000, cash of 3,000. So this cash for transaction 11, this is cash of 3,000, and this is the corresponding entity is bank of 3,000. So I'm going to cancel this. I'll cancel this, and I'm going to cancel this as well. So this is the appropriate entry. So that was a mistake. So to know the balance, I will add up the debit side together and I will add up the credit side together. So the difference is the balance. The difference in the debit and the credit side is the balance. So then once you get the balance, then we are done for the first for the first year financial for the first financial year. So um, sorry. Okay, so now we are done with the transaction. We are going to find the balance. The balance is the difference between the debit and the credit side. So if the debit side is more than the credit side, then we are going to have a debit balance. If the credit side is more than the debit side, then we are going to have a debit. Sorry, if the debit side is more, we have a debit balance. If the credit side is more, we have a credit balance. You understand? If the debit side is more, we have a debit balance. If the credit side is more, we have a credit balance. So let me find the difference. For the bank account, on the debit side, we have a total of 4,000 plus 6,000 plus 3,000. That is 13,000 on the debit side. So, and of course, I know that the debit side is more than the credit side. So, I'll see balance carried down. The difference is what we call balance carried down. The difference between the both sides is the balance carried down. So, for the credit side, I have 500 plus 500 plus 2,000 plus 60. That's 3,060. So the difference is what? Minus 13,000. 9,940. So my balance brought down with 9,940. It's very simple. Just follow my explanation. I will add the total of this side together. I will add the total of this side together. The total of this side is 13,000, which is more than this side. So the difference between this side and this side, difference is what we call the balance carried down. So the difference is 9,940. So now the total of this makes 13,000. The total of this makes 13,000. So this balance carried down automatically will become balance brought down here. We have your balance carried down here. If you turn to balance brought down here, if you have your balance carried down here, if you turn to balance brought down here. So my balance carried down is on the credit side. So my balance brought down will now be on the debit on the debit side. So let me move to the next one. So for cash account too, on the debit side, I have 500 plus 3,300. That's 3,800. 3,800. On the credit side, I have 80 plus 50 plus 3,000. So the balance is 3,000. That's 3,130 minus 3,800. The balance is 670 for cash. The balance is 670. So I'll say balance carried down 670 and balance brought down 670. So this is my cash account. The addition of the total debit side is 3,800. This is zero. Sorry, it is not. It's 3,800. The addition of the credit side is 3,800. So the difference is 670. The difference is balance carry down. Balance carry down turns to balance brought down here. So that's for cash account. So that's how I will close the account, or that's how I will close all the accounts. So for furniture account, so for furniture account, I'm not going to show you anymore, but I've just showed you how to close the account. For furniture account, I have on the debit side 2000, on the credit side 400. So the difference of 1600, the difference between the account is 1600. So my balance brought down is 1600 for furniture. The difference for equity, so for equity, the difference is 4000. For purchases, the difference is the addition for the debit side is 3850 plus 50. That's 3900. We don't have anything on the credit side. So the balance is 3900. For advert, the closing balance is 80. So that's how you close all your accounts. Okay, you close the account for close account payable, and let me see if you are going to be correct. The total is 5850. So the balance carried down will be 3850. So the difference is 3850, which is balance brought down. You can see for account payable here, account payable. So that's how you do all the accounts. That's how you do all the accounts. So this is where I'm going to stop for the first year financial transaction. So you can check the next video for the financial second financial year. Thank you, and thank you and welcome to my TED talk.